is banks have been cutting back so much, and yet they're finding more flab to trim. Where is this flab coming from?
Yeah, I think originally what was arguably perceived as meat and flab, those ratios might have changed somewhat as time has ticked on. Obviously, the economic environment has shifted, and as such, some of those parts of the business that might have been deemed core are arguably no longer that. And I guess to a certain extent, the necessity with which they need to drive these changes home has been forced upon them a little bit more, especially with the likes of, say, French banks with a change of government stance there as well.
Right, okay, so SocGen, of course, is one of those that's finding more flab to cut. The Q1 results outdid BNP Paribas. Does this suggest that perhaps its shares have got more room to rise?
I think when we look at the banks, maybe it's best to look at where they are at the moment and what the market has reacted to their share price. We've seen an upturn in most of the European banks in the last, say, month, and I guess that's really a reflection of how the market has changed their mentality and their perception of how the ECB and the Eurozone as a whole is viewing the sort of stimulus austerity balance. And I think there's definitely a shift towards stimulus, and with that likely to be the case, and certainly equity markets have been factoring that in, the likes of the European banks have been one of the first areas to really see the benefits of that mentality shift.
So what's going to happen when we have this ECB feel-good factor wear off?
Well, it's a good question. I mean, obviously, we had last week we had a 0.25% cut from interest rates, but that was widely anticipated. I think we're going to need to see a little bit more creativity come from the ECB as to how exactly they're going to stimulate. It's all well and good cutting interest rates, but we need to see them actually proactively assist companies in the Eurozone to move forward and help them build themselves out of this. It's not just the debt side of the GDP debt ratios that needs to be attacked. It needs to see these GDP ratios, the GDP themselves, increase and improve.
Right. So, Alistair, with this as a backdrop, if you had a client that said to you, I still want to be exposed to banks, what would you say? I mean, UK banks versus French versus US versus German banks?
Yeah, it's an interesting question, and I think if we look at the banks, it looks like most of these banks are trying to turn that corner, and the turning circles of these banks are never very quick in the first place. But it seems that the Americans are certainly a step ahead, and the American government have managed to extract themselves from quite a lot of these banks. And the figures we've seen from RBS and Lloyds does feel very much like UK banks have already started to turn that corner. The French banks and the German banks, I guess, would be a little bit further back in the whole cycle of events. So I think in that regard, there's probably more growth side as far as French and German banks are concerned.